I think the real world asset market is really where you're going to see a lot of gain, and you're going to see a lot of correlative economics that happen there. But there historically has never been anything like gold. And when people flock to things, they flock to gold because they can hold it, they can see it.
$5,000 gold is something you've called on my show last time. It's the upper range of your forecast. It's not an inconceivable number, given that gold's already up 100% since a couple of years ago, and 5,000 from here is less than, 50% move? About 60% move? So what does that imply for the global financial system if gold reaches $5,000? Is there an ultimate war insurance premium? Let's find out with our next guest, Morgan Lekstrom, CEO of NexMetals. That's ticker NEXM, and it'll be listing on the NASDAQ soon. Welcome to the show. Welcome back, Morgan. Good to see you.
Yeah, great to see you too. Thanks for having me again.
People should check out our last interviews with Morgan. You've been correct in your calls for gold.
What do I think the ceiling of gold is? I think it's really going to depend on two things, two big things, a lot of other micro things. What BRICS does, if they decide they're going to hedge to it, and what they're going to do to the US dollar, and the tariffs. Like the move that Trump makes to try to reign supreme with the US dollar. Like I said, I think it's going to go up, and then it's going to candlestick back down. So it's a worry. Look, I'm not saying the US dollar is going to be completely gone and obsolete. I don't see a world that happens right now.
Sure.
But I'm saying that you think it'll be volatile this next few years. There'll be some very interesting decisions made out of, foreign countries and the US that will create a volatile US dollar market. And I think a more supportive gold market. So do I think 3,000 is attainable? Heck, I think 3,000 to 5,000 is attainable. And what that does to the silver market?
You've perfectly called $3,000. You've said it's going to go above $3,000. You've listed your reasons why. The debt crisis, the ongoing deficit ballooning, amongst other things. Inflation concerns right before tariffs were announced. So that you perfectly called all of those things. So people should check out that interview. Link down below. With gold now trading at $3,300, 3,333 on my screen exactly. Let's get your outlook for the next couple months. But before we get your medium-term outlook, let's talk about what happened today on the 24th of June, right after the day after Iran retaliated against the U.S. missile attacks on its nuclear facilities. There seems to be some sort of de-escalation as there is a ceasefire. Israel is now blaming Iran for breaking the ceasefire. But anyway, the markets are kind of relieved at this ceasefire. Stocks are up 1.5%. The Nasdaq's up almost 1.5%. Gold is down 1.8%. So let's talk about why gold is down right now. Perhaps the gold market is signaling that nothing is going to happen with the Middle East. I'll get your take.
Yeah, thanks. There's a lot happening in the world right now, and the variability and volatility of each decision that a country, the United States, Iran, Israel, the European Union, Russia, China, each one of them kind of has an inflection point in gold. But gold only being down, 1.5, 1.8% shows you that the risk premium that was built into gold is very small. As in, that was a major world event, and gold went down 1.5%. So it's way more hedged to the US dollar de-dollarization than it is to anything else. So the premium that was there, like, example would be if gold was $3,800 and the war broke out and then it stopped and gold went down to $2,500. That's a hyper volatile gold price, and that would be completely hedged on a world event. Whereas the value of the US dollar is degrading over time, and that's really where it sees it. The risk profile that was built in, or the risk premium that was built into gold for events like this, is so small right now, and you can see it in the gold price. It's wild. I don't think we've ever lived in a time like this before. Usually gold is hedged to these world events, and now it's providing a hedge against everything, which is great.
Isn't that a case against gold, though, if it's not moving up as much as it should be on geopolitical tensions? I'm just trying to understand.
No, it actually, I would actually say it the other way. It's moved up from, the last interview we did was $2,500 gold. It's at $3,300. That was 6 months ago, right? So if you look at the year over year return, it's 43% right now. Year to date, 26.5. That's a wild move, right? Like I think the investing world expects something to happen in the Middle East. That's like a general conflict zone for the last 1,000 years, right? And then the
Hmm.
last time I've been alive, there's always been something in the Middle East. So I don't necessarily think it really changes much for gold because it is not necessarily a huge impact on the United States, China, Russia, other than oil. And you saw a wild swing in oil, went up to $76 and they closed the Strait of Hormuz or tried to, and then now they're in ceasefire and oil just wildly drops, right? That is volatility. Gold, it's the hedge against all of it. And I think it's going to have some ups and downs, but it's going to just continue to ratchet up because the volatility of the dollar base in the world is changing significantly. And the ability to use the US dollar as a reigning supreme commodity, I think is going to, it's struggling right now, and gold's signaling that.
So you called $3,000 when gold was at $2,600 when we spoke last in December. It's now gone above 3,000. It touched 3,500. It's now come back down to 3,300. What is your outlook now?
Look, I think there will be a subtle pullback in gold for a very short period of time. And when I'm talking subtle pullback times, I'm talking, a week, a month, maybe. But I think it's really going to stabilize. It looks like it has stabilized in the upper 3,000 range. 31 to 3,300, I think, is a good stability range for it. Then it's really going to be dependent on Fed rates. I think inflation still is a major issue. I think it's going to continue to be an issue. And there are key drivers that will make this a continued issue, spending, deficits, all the other stuff that we're in this debt cycle. It's going to happen. We are going to have some type of monetary issue in the near future, and the gold is the pure hedge against that. And you're actually seeing the interesting somewhat of the crypto universe starting to hedge a bit, which is not a subject I want to go into right now. But look, I think gold over the next 6 months, 35, 37. But I do see a short-term pullback, which is a buying opportunity for people. But I do see it stabilizing here and then slowly starting to ratchet the staircase back up, similar to what we talked about in the last interview. It was a staircase effect, and I think some people call me crazy saying, no, it's not going to staircase, and it perfectly staircased up. I think we said 3,000 and then 3,300 within a few months
Mhm.
after, and we hit that hit that nail on the head. It was very tariff dependent, but it also was showing instability within the currency markets.
So last time we were talking about the prospect of tariffs driving up inflation expectations, which could push up gold, the dollar weakening, which could push up gold. The dollar weakened, by the way, that happened, so you were right on that as well. What's the thesis this time? What's going to take us up to the next staircase up, like you said?
Just the continued spending of money in the US. Any more volatility with China de-dollarizing the US more? Look, I still go back to the BRICS theory. I think BRICS is going to play a big part in rehedging to a commodity, gold, oil, that kind of stuff. But I think it's the U.S. deficit. I mean, you're in a hyper leveraged state in the U.S. and in Canada. I mean, look at the way we're going to start spending money here. Now, I'm a huge fan of the Swiss franc. Like it's just tried, tested, and true all the way through. It's almost like gold in a sense, but the U.S. dollar spending power is degrading, and gold signals that. So, do I think it's how do I think it's going to go up? I think you're going to realize de a deglobalization trend that will push gold up because of the way the U.S. dollar is not able to be spent. And that I know that's a big prediction, but I think you're starting to see the cracks. You're seeing it in the bond market. You're starting to see the cracks in the treasury market, and you're starting to see cracks in foreign relations. Iran and Israel are a great example of that. I was shocked to see that, not shocked, but interested to see that Putin and Xi Jinping actually went to the UN and like, hey, this needs to de-escalate right now. Like, nobody wants an all-out war, and I actually don't think Trump does either. Trump's not a war president; he's a business president, as he calls it. So he's going to be focused on how do we create business in that area, and de-escalating it, which again I think is all still good for gold.
What do you think is going to happen with Israel Iran?
Oh, that's an interesting question. What do I think will happen between Israel and Iran? I've got my own theories on it. I think there'll be a very fast regime change. I think that they will use Iran as a middle ground for Russia and China and the US to meet. And I think they'll carve it up. That's what I think will happen. I think it'll still stay Iran, it'll still stay sovereign, but there will be a middle ground there because again, there needs to be a central point for peace when 20 or 15% of China's oil comes from Iran, right? And it's sanctioned around the world. You have the Russians going on with Ukraine right now. That last time they had any war in the Middle East was Syria, and it just was horrible. So I don't think anyone wants to have a war in the Middle East right now. I sure know this. Seeing the Saudis' reactions and the Emirates' reactions, even the Israelis. I mean, they're more worried, but I do think that Iran will become a kind of a mecca hub for peace. I think that will happen. It's going to take time, but I think Trump will go in there. This is my prediction. I think Trump will go in there and will say, "Look, we're going to carve up the oil reserves for this, so that the world can share it." I don't know how that. I don't know, if that actually works like that, but it's just a theory out I have because again, I think his idea of how peace works is business deals, right? If we're doing business together, we need to stay peaceful.
This is actually in response to what you said just now. I don't want it. Trump says the U.S. is not seeking regime change in Iran. That's what he said. Again, he could flip flop. It could happen. I'm not
He also
saying
said
your prediction.
he also said I didn't want to bomb Iran, and then a day later bombed it.
Could be, yeah. Could be that he's not telegraphing what he wants to do. But in any case, your sentiment is echoed amongst White House officials. They don't want this to escalate. So let's assume that a de-escalation is in the cards. From an investment standpoint, what does that mean for gold? What does that mean for the U.S. dollar and other markets?
I mean, look, it was gold. Gold went up before this whole thing escalated. It went, on a ceasefire, it went down 1.5%. The risk premium in gold is not built into conflict right now. It's built into de-dollarization of the U.S. It's built into a currency change, and it's built into complete and utter decimation of debt that each country is in right now. So we've been printing money like crazy people for so long that there is a debt cycle happening, and it's proven in history over and over. I know Frank Juicer talks about it a lot. It's actually probably where learn a lot about this, but he's not wrong in the sense that you will get to a fulcrum point where you'll either need to re-hedge to something, or it's so much debt that your currency becomes invaluable or devalued, to the rest of the world in a sense. So your purchasing power goes down significantly. I mean, you see that happening with China looking at China-India relations, China-Pakistan relations. You have, again, I go back to BRICS. They're looking at a way of getting off the U.S. consumerism, right? I mean, the U.S. is the biggest consumer in the world. We're a consumer-based culture. And when consumer-based cultures get to a point where the debt outweighs the income, which outweighs the consumption, and everyone's pulled away from that, everything gets really expensive and inflation goes nuts. And you want to see what happens to gold then. Oof, look out.
Is there another equivalent, just so, okay, for the audience out there watching who may not be familiar with the gold market, is there a market's equivalent to gold for its role in the investor's portfolio, whether it be hedging against inflation, dollar debasement, and or fears surrounding wars? What is the closest thing to gold that we have right now?
Are you talking to invest in, or are you talking about for just in general?
In general, an asset class that serves a similar purpose. Let's put it that way.
Historically, nothing has. Historically, over thousands of years.
I was hoping you'd say that.
Yeah, historically, nothing ever has. Silver has played an interesting part of that for years. Gold has always been the main hedge for governments and for the wealthy, and silver has always been the trading mechanism. So, because there's much more silver and it's valued quite a bit different than gold. But yeah, there's nothing else out there like that. I know Michael Saylor always likes to say Bitcoin, Bitcoin.
Yeah, is Bitcoin the new digital gold?
Well, that's what he calls it. The funny thing I love about it is they still use the word gold in it. They have such like PTSD about gold. There's such a complex about we're going to be the new gold. And look, Bitcoin will be around for a very long time. I think it goes up, it goes down. I just think that people going out and buying massive swaths of it institutionally like they're doing is going to be a problem for the Bitcoin world because at some point redemptions will happen. And at some point, if Michael Saylor ever sold a single Bitcoin out of MicroStrategies or Strategy now, that market would implode, right? Where people and this is actually a very interesting numbers here for you. So the Bitcoin market's about $2 trillion, right? That's the net worth of Bitcoin right now. The
Okay.
gold market is 22 trillion. It's 11 times bigger, roughly. Now, the total volume traded for Bitcoin is about $50 billion a day. The total volume traded in gold is 233 billion. Put that in context, the S&P trades like 330 billion. So gold is one of the most traded, one of the most active assets on the planet. The total TAM for the commodity space is like $140 trillion. You're talking about a market that has been tried, tested, and true over time. The crypto market has yet to prove that out. I think the real world asset market is really where you're going to see a lot of gain and you're going to see a lot of correlative economics that happen there. But there historically has never been anything like gold. And when people flock to things, they flock to gold because they can hold it, they can see it. Maybe they have a digital contract on it, but it's been a try, test, and true method here. So I don't necessarily. I'm always about progress and believing there's a different way to do things. But overall, I don't think the world is set up quite yet to go fully digital Bitcoin when 90% of it, 80% of it's controlled by the U.S. markets.
I started in this space in 2020, roughly. Back then, gold was, I think, $1,500 right before the pandemic, and nobody, even the most bullish people, expected $3,300 gold by this year. I think people were calling for 10,000 gold, $3,000 gold, $5,000 gold, but later on in the decade. But recent moves have surprised even the most bullish analysts. $5,000 gold is something you've called on my show last time. It's the upper range of your forecast. It's not an inconceivable number given that gold's already up 100% since a couple of years ago, and 5,000 from here is less than, 50% move? About 60% move? So what does that imply for the global financial system if gold reaches $5,000?
It's in trouble. The debt's, I think gold going over about 4,100, 4,200 bucks, another $1,000 move up. And that's on monetary reset type. That's debt's collapsing. That's, the US inflation going through the roof. That is when gold goes up to 4,000, and it will, we are at the end of that debt cycle, that debt bubble. There will be a hedging point where people are going to come back flocking to it. I think you're going to see first a real estate kind of crash, which you're starting to. I mean, I look at I call it the Rolex Ferrari economics. and if you're looking at the price of a newer used Ferrari or a newer used Rolex, the used Rolex market has gone down significantly. The used Ferrari market, where a Ferrari would be $1 million, now it's about $500,000, and they're not getting bids on them.
Yeah.
That means the luxury good markets in general, of the high end people, the people that could afford those types of luxuries, they're getting more conservative, and they're getting more conservative because they're not taking on the risk and the debt to do that. Yet which means that they're going to be selling houses. I mean, I live in North Vancouver, and about a year ago, looking at houses under $1.6 million, nothing anywhere in the lower mainland. Like, it was you couldn't find it. Now they're everywhere. They're everywhere. There's like 25 of them for sale. It's crazy.
Wait, is this the bottom of the market, or you think it's going to get worse?
I think
what you're talking about now.
I don't think it's the bottom yet. I think from the real estate side, you're actually going to have a push down. Again, spending power is degrading, right? So hence why gold's doing what it's doing. The spending power of the average person in Canada, even in the US, is going down because they're more reliant on credit cards and debt and lines of credit to do that. So, I mean, a cost of a truck now is $80,000 to $100,000. I remember 10 years ago it was 40, 45 grand, you get a nice new truck. Now it's 85. Yet the median income hasn't adjusted to that. Neither has the salaries overall. Like, we haven't barely even adjusted to inflationary numbers. So yeah, everyone's taking on more debt, which creates a kind of a circular reference of take on more debt to not make more money to take on more debt. It's an inevitable crash.
So okay, so what does that mean for markets? What does that mean for the economy when the rich are slowing down their spending and selling assets?
Well, it means that the upper assets get hit first. The upper expensive assets get hit first, and then as they don't sell, that gets people worried. So the other assets start selling. The good thing about housing is people always need a place to live. So the rental market generally goes through the roof.
Mm-hmm.
And most people by that time are in debt. So they're going to say, okay, well, I've got 100,000 or $500,000 of equity in my house. I should sell it and do that. Or they pull a HELOC, a home equity line of credit, and they leverage themselves up even more. There's nothing wrong with leverage if you know how to handle it. The problem with leverage is we made credit so easy and the dollar so cheap to get that you have no reason to go to a car loan or no reason to use your other types of credit. So what happens is you lever the low interest credit first, which is usually your principal residence or principal assets, and then you start getting in a cycle. Okay, I've bought all this stuff. I want to keep buying stuff, and then you get credit cards going, and you get lines of credits going, and then you're like, well, hold on. I mean, the houses went up, so I should sell. But by the time you do that, you're actually out of a cycle, and you're selling into a downward spiraled market, which means most of these people are going to often come up net zero or below. It's going to be shocking what happens. So what's that mean for the market? I think again, gold strengthens. I still think that, and not to be counterintuitive here, but I still think that infrastructure projects are highly, highly needed. That's an actual big part of inflationary driving. So you do need massive spending on infrastructure, on the aging electrical infrastructure, and that will drive copper. Copper overall, I mean, we are moving fast as the world economy. Whether when I say crashes, when you think of a crash on a 10-year term, I would put it as 8% of that 10 years will be crashed, right? So we're going to have a big down and then you have a big up again. And those waves of down and up are sinusoidal, right? They're waveform. There's spikes and
Yeah.
there's valleys. Those are compressing significantly. So the time from high inflation to low inflation, and there's a time dilation in between there, those are doing this. And they're shrinking. So you're going to have high inflation, low inflation, high inflation, low inflation. The time domain portion of that is moving very, very quick. So you're going to get a lot of volatility. But again, gold will hedge against that. The requirement for minerals. I talk about copper because obviously we're here talking about NexMetals. And I look at, the Chinese coming off the US dollar and trying to form other alliances. I mean, they've openly come out and said, we need copper concentrate. We need more of it. And the truth is the world needs more copper. The world will need more nickel and palladium and platinum. You've seen the moves in palladium lately. It's wild. We're coming into this volatile lack of commodity time because we didn't do enough exploration. We didn't invest in the exploration companies that were needed. And we didn't do that because it was a much better dopamine hit to go out and buy volatile crypto because some influencer told you online, you could get a Ferrari if you buy this crypto right now. Whereas the fundamental side of investing has gone to the wayside. If that needs to come back, and I see it coming back, you can see it in the markets.
By the way, a lot of crypto miners, Bitcoin miners in particular, hold their Bitcoin. So they mine, their business model is they mine the Bitcoin, they hold it, and then and that's how their valuation grows. Is that a model that gold miners have considered? I mean, maybe you can sell some of your gold, but just hold it on your books, especially if you believe that gold has a lot more upside to go. Wouldn't that? Yeah, go ahead.
Sorry, David. I'll tell you why they haven't considered that, or why I think they haven't considered that, and I won't comment on that any further because I'll be in conflict. So, but why gold miners haven't done that is because they're running depletion assets. They're depleting assets, so they're always depleting their mines. So they need to be selling as much as they can to get another mine. It's an insane cycle when you think about it. So if you're a big gold miner, you're like, I've got a 20-year mine life and a 25-year mine life, and so every year closer to the end of that mine life, you have to put more money into exploration or more money into buying another company to replace that. So you're in what's called a reserve replacement model. It's circular, right? So you keep going through this. So you need the money to keep your company alive. Whereas that model to me is completely broken. I won't talk about the new model that's coming out there, but yes, there is an aspect of keeping your gold. as a hedge. I mean, you look at ETFs, that's what they do, but they're very volatile with the gold price. I think there's a new model that's going to be built here shortly, and then I think everyone will like it.
Okay, well, can you comment on this today, or are we saving this for another time here?
Let's save it for another time.
You're leaving us on a cliffhanger. I like that. Okay,
Good.
Morgan.
Yeah.
Well, what? Okay, so if they're mining their assets to depletion. How do they grow long term then?
Look, I think there is two ways to grow long term. Obviously, you got to replace your reserves. That's just a common known thing about a mining company. Same with NexMetals. We'll build out our portfolio and our current projects there, and we're showing. That's why we're going after showing scale and size first, versus just starting to mine and then hoping for the best. When you talk about a lot of the miners in general, they will be stuck in that reserve replacement model. That's how miners work. You have to replace your reserves. That's how the market values you. You know, if you're Newmont, you're mining 6 million ounces of gold a year. If you go to five, you cut. They're not directly correlated. You wouldn't drop, 1/5 of your 1/6 of your market cap. You drop 50% of your market cap, right? Like they would see it as a huge negative. So do I know how it's going to get fixed? Absolutely not. Do I think that you're going to see a massive change in the order of what mining companies are? I really do. I think you're going to see massive consolidation, because we haven't done the exploration work to provide the new projects. The big companies with the money are going to need to go buy them. They're going to have to. They'll get forced to. You'll see the whole mid-tier market clean up, and then there'll be left one or two mid-tiers, and then you'll see the whole junior and development market move up with it. I think that's coming sooner than people think.
Massive consolidation amongst which tiers? The juniors or the mid tiers?
Well, you're kind of seeing it in two ways: the mid tiers and the seniors, right? You're seeing bids being made for two big companies together. Like,
but are the big producers buying mostly smaller deposits, explorers, or are they buying
they're investing
the
now.
Producers?
They're investing now in explorers. You can see that. But what they are doing is they're saying, okay, you de-risk it as a mid-tier for us, and we'll come in and buy you. And the mentality of hurry up and wait. They have the money. They can do that, right? They can wait for you to de-risk your project and do all that. Now, where the mid-tiers, I mean, you just saw Caliber and Equinox merge. You're going to see, I think, 3 or 4 more of these mergers, and the mid-tier market is going to go whoosh. Same in copper. There's 5, maybe 6 mid-tiers in copper in the world. That's nothing. It used to be much bigger than that. And they're starting to look at consolidating. So, I think one of the best run companies out there, in my opinion, is Lundin Mining. Like, just exceptionally well run. They've just done a very good job of it. Same, just overall, I like Capstone a lot. I think they've taken risks. They've done great things. So there's a number of great companies, but size wise, that 5 to 8 or $4 to $8 billion range, there's a number of companies that I think you're going to see slam together, and that will give the development companies the next leg up, because there will be a lack of mid-tier investments available.
Tell us about NexMetals. It's not just gold, is it?
No, NexMetals is mainly copper, nickel, cobalt, palladium, platinum. So predominantly copper. Two past producing mines in Botswana, the safest country in Africa. A lot of people think that Africa is just one big blob. It's like, hey, we're going to Africa. It's like, well, when you go over to Botswana, the people are incredible. The government's super friendly, very well developed infrastructure. These are past producing mines. They stopped producing in 2016. So, when people generally hear past producing, they're like, oh yeah, 1905 and 1868, the shaft was active. Yeah, no, 2016. So they didn't keep up with their resource expansion, and the smelter had issues, and the thing, went into receivership. We were able to get it out and show that there is significant scale there. So we are running a very rapid expansion program right now, and that expansion program will last the next 6 to 8 months. We're kind of taking it at a 4-legged approach. We're expanding our main asset, Salive, which is our underground. It's high grade. There's very few of these high-grade copper, nickel, cobalt deposits on the planet, especially massive sulfide. We have full underground infrastructure. We walk right down. We can drill from underground. We can drill from surface. We have all the advantages of being a past producer with very little of the headaches of it. So we're expanding that program. Our Selkirk mine, which is about 75 kilometers away, was a past producer at the underground, but it is a giant open pit resource. And we're expanding that again. Reassay program, low cost
Hmm.
expansions. We've raised a significant amount of money. We don't need money anytime soon. And the reason why we're in this is because we see this part of Botswana being a central hub for the copper, nickel, cobalt trade in that part of Africa.
This is a press release about your company. Early June, Premium announces name change to NexMetals Mining Corp. Well, let's get the message straight from the horse's mouth, so to speak. Why did you do this rebrand?
Well, it was a full rebrand of our team. Our board's been changed up. We think it didn't. We didn't think the word premium was too associated to the past management and the past and
Hmm.
the past overall. Nothing against past management or anything like that, but more overall showing the new direction. We believe
Sure.
we're a next metals company. We're not a nickel company. We're not a copper. We're more focused on the copper side. So premium resources to me, not to knock it, kind of sounded like something you put in your gas tank. I wanted to make it sound like something you'd want on your on your on
Fair
the
enough.
collar of your shirt. So next metals came out. I think it really exemplifies where we want to go as a company. We want to be the next metals, next critical metals mining company in Africa.
So, what is the next critical piece of news or development that will push critical metals, pun intended, much higher?
I look. I think there's some geopolitical issues around certain assets out there that a couple of them being shut down. Again, also the drive for more copper. I mean, China coming out and saying we need more of it. I think the nickel market's going to heat up shortly. It's been depressed for a very long time. The
Hmm.
Indonesians are starting to put the royalties and such items, as well as shutting down nickel mines in Indonesia. Those laterite mines, they're going to start running out of their high grade as well. So you're going to come into a deficit here fairly shortly. Um, that I think will cause significant spikes.
The ongoing trade war between China and the U.S., with China playing its cards very close to its chest, meaning they have a lot of tools at their disposal to fight against trade wars and tariffs. So they have critical minerals as one of their weapons of choice if they choose to deploy that weapon, meaning if they were to ban the export of critical minerals, including cobalt, including copper, what would that do to the global economy?
Oh, it would definitely throw it in turmoil. The problem is they wouldn't want to ban the export of critical metals because that's a lifeblood for them, right? Like that's where they get
Yeah.
money. That's the money. What I think they would do is they ban them to certain countries. They would say, "Hey, we're really forming into bricks here." Once they get that supply chain sorted out on how they're gonna push on that supply chain, that's when they may put tariffs on outgoing commodities. But again, that only drives the price. It's pretty smart actually. It drives the price up. They tend to stockpile, but their stockpiles are running really low on the copper side right now. Hence, they're asking for more concentrated from around the world. I think it's something the U.S. really needs to work on is how to come up with a stockpiling regime. Like we don't stockpile. Neither do we in Canada. We don't stockpile resources. We just mine them and sell them and hope for the best. Whereas that's more the capitalistic nature of what we're involved in. But as far as China goes, they do hold a lot of power in the pricing, but less so in what people believe could be impactful for copper and critical metals because they're running short on them. So that tells you a lot. I mean, some of these critical metals are used in fighter jet paint, right?
Mm.
That they use in the fighter jets. Like those could be debilitating things for an American economy. So yes, we want to find them. We want to find them local. We want to create government relations that allow us to offtake to the U.S. and
Yeah.
other nations like that.
I'm just musing here. If everybody believes that there will be a copper shortage or a shortage of critical minerals going forward, wouldn't the market and market participants like yourself naturally want to band together to fill that gap? In other words, we were taught in Economics 101 in college that if there is going to be some sort of deficit or supply gap, equilibrium always takes hold at some point or another, right? So what's going to take us to equilibrium if ever we get there? Will we get there?
All
I mean, yes.
Yeah, I mean, we tend to like as a culture to wait and see. We're like,
Okay, is that the
that
Canadian
won't
culture,
happen.
or is that just human nature in general?
I
For
think
the
it's
mining
human
culture?
nature. We're overly
Okay.
optimistic. We're like, wow, I mean, they're saying it's going to be a copper deficit, but isn't. And the world tends to do that, and then they go, oh crap, we like I like to run off leading indicators, and most of the world runs off, oh my God, that happened, lagging. Now we got to change. And unfortunately, with mines, that works horribly. You cannot just change your iPhone software, in a mine. You'd be like, well, hey, that update didn't really work. We should roll it back and not do it. You can't go back and say, oh my God, we really need to build 10 mines like right away. And you're like, that's going to take 10 years. That's the problem. So the capitalistic nature of you talk about banding together, I think that'll be more government push at some point than less. That will have to be, you're talking about interrupting capitalism to an extent. And, that's why consolidation in the mining space is going to happen. But overall, yeah, we tend to like to let things happen. We're very not overly proactive as an economy. We tend to be more reactive.
Reactive. Eventually, how would that reaction work or look like? What would that look like? You can't just go in the ground and produce a mine tomorrow, right? You can't just produce copper out of thin air.
Yep, correct. You cannot do that as of yet. We're not alchemists here, and we can't produce copper like that. Look, that's where you will see massive volatility in pricing, right? You'll see a huge supply chain shortage. This is the cliff we're coming off of soon. And some of the biggest titans in the industry, Robert Friedland, Frank Giustra, like Sean Boyd, we all talk about it. It's a huge, huge cliff coming at us. And everyone wants to solve it. But the problem is there hasn't been enough money put to solve it. So we don't have enough mining companies out there trying to solve it. And we don't have enough regulations to allow them to solve it quickly. So, we tend to hold things up in regulation. Well, it's going to take 10 years to permit that mine, which is great for me and NexMetals because our mines are permitted. We have permitted mines. So, we're past producing permitted mine sites, which is huge leg up. But in North America, we're really slow at this. This is something that Trump's talked about. This is something that that Mark Carney's actually addressed as well. And to be politically agnostic here is that we need to change times for mine permitting. And that's not even the real issue. The real issue is where are you going to find it? Because there's been no money pumped into finding it. So that's, how do you solve it? You don't.
How long does it take to how long does it take to get a copper mine operational from the exploration phase all the way to the production phase? Roughly how long are we looking at here?
Depends on the country. Canada, 19 to 26 years.
Wow.
Quarter century.
Is there any way we can, I don't know, as an industry lobby the government to reduce permitting times?
100%.
How does it take 26? Why does it take 26 years? Let's maybe explain
from the day you try to find something. Let's say you're 2 to 5 years of putting a resource on it. You're a couple of years of studies in there. You're starting permitting. You got to do all your baseline studies. That's probably 2 to 3 years of baseline studies. And then while you're doing those baseline studies, you're also permitting. That's another 3 years. So you got 15 years really quick. And then back and forth with governments, First Nations, all that stuff. That takes another couple of years. So the real key is to find mines that are almost or are permitted. Like when we, last time David, you and I spoke, I was, involved with building out NexGold. And the reason we built that company the way we did was you had two assets that had already gone through the permitting process that are in the final phases. So they've been value destructed because everyone kind of got sick of waiting. And now they're into value creation mode because they're actually about to get permitted to start building mines. That issue for us at NexMetals doesn't exist because we have a willing government. We have a mine site that's already been past producing. So I know I go back to NexMetals, but there is distinct advantages for operating in countries like Botswana and Namibia and stuff like that allow speed. I'm a big believer in TVM, time value of money. So that's how we look at it.
What are the jurisdictional risks that investors should be cognizant of with a company operating in Botswana?
A lot of people don't know that Botswana is the longest standing democracy in all of Africa. 58 years, almost 59 now, as a democracy. There have been very little issues in that country. Again, it's the safest country in Africa to go to. Every time I'm there, I feel very welcome, very safe. You walk the streets at night. You go there and you see nice houses, swimming pools. Like it is a very, very well put together country. It's very low population, but it's very massive in its sense. So when you talk about risks, I mean, you have risks kind of in every country, but you don't have the main risks that like DRC has. The Chinese haven't really gone hard into Botswana yet. They're starting to. Khoemacau was bought out by MMG, and you're starting to see more and more interest in the country because it's less and less volatile. So I think people naturally like conflict. I actually don't. So I like that Botswana is very low conflict. There's no conflict there. The government wants work. They want to produce minerals and they want to export. So it's a very great place to work for as
Well,
a company.
some miners operating the DRC have to spend a little more on security. That comes out of the bottom line. Is that you? Is that do you have to do that
Zero.
for Botswana? No.
Nope. No. It's if you came to our site, hopefully you do one day. The
Mm.
security guards are the people you check in with at coming into the entrance. It's a very safe country.
All right.
Yeah.
Well, okay. Well, in terms of the geology, what makes Botswana unique?
So there's kind of two components to Botswana that are unique. You have the Kalahari Copper Belt, which is a very underexplored copper belt that kind of comes across the northwest side of the country, and then it kind of comes across into the Salibe kind of trend there that goes all the way up to Francistown. A really large, massive sulfide deposits, right? You have very underexplored country because there hasn't been a lot of money pumped into it. DRC is a freak of nature. It is one of the highest grade countries on the planet for all the different mines it has. Where you're talking about copper. I mean, Kamoa-Kakula is just a beast of an operations. But to your point, comes with a lot of conflict. Botswana doesn't. I'm not a geologist. I'm not going to try to speak geology, but there are significant opportunities in Botswana that have not been looked at that I think are starting to. You're seeing a lot of different groups come into Botswana now because it's easy to get to, it's safe, and you can operate there.
Interesting. And what's the next major milestone for NexMetals that we should be watching for?
The next milestone for NexMetals. Yes. Everything from drilling and resource expansion to metallurgical updates and work, which is kind of a key for unlocking a lot of the lower cost components here that we're talking about. We think we will have a very large amount of news flow, potential for work with the Canadian and US governments, partnerships potentially with the Botswana government, both Salibe and Selkirk rapidly expanding. So again, we're not running a linear path here with NexMetals. We're running concurrent paths. We're running multiple concurrent paths because I believe that's how you compress time value of money, and you show your shareholders what you have, and you give them the best chance at making a lot of money as well.
Okay, interesting. Very good. Thank you very much. Appreciate your thoughts, Morgan. Where can we learn more about your project and your company's developments in the meantime?
NexMetalsMining.com, and on the TSX Venture, we're NEXM, and on the NASDAQ shortly.
Good. Thank you very much. Congrats in advance of your NASDAQ listing. So we'll look forward to that.
Thanks.
And we'll speak again soon, Morgan. Take care for now.
Thank you.
And
Thanks,
thank you
David.
for watching. Yeah, thank you for watching. Don't forget to like and subscribe. Follow NexMetals. Link down below.